Hello again, I am Devlyn Steele, Director of Education at Augusta Precious Metals, here with a look at some of the bigger economic news that emerged this week. Before we begin, remember to like this video and subscribe for more economic updates. The state of the economy is one of the many issues that people are concerned about this election cycle. In a recent Gallup poll, 45% of the country described the condition of the economy as poor, with nearly 70% saying it's getting worse. This week, the Commerce Department announced on Friday that the annual rate of the Federal Reserve's favorite inflation measure, the Personal Consumption Expenditures Price Index, increased at a pace of 2.6% last month. That's the same as November and right in line with estimates. The overwhelming expectation is that the Fed officials will leave interest rates unchanged when they meet next week. As for when the first of several anticipated rate cuts might begin this year, traders right now say there's about a 50% chance of one in March, but a 90% chance we'll see one in May. On Wednesday, S&P Global checked in with improved numbers for January on behalf of its manufacturing and services purchasing managers indexes. Manufacturing PMI came in at a measure of 50.3, up from 47.9 in December. It's the first time since last April the index has been above the threshold of 50 that distinguishes expansion from contraction in the manufacturing sector. As for services PMI, that also increased this month, climbing to 52.9 from 51.4. That marks 12 straight months of expansion in the services sector. On Monday, the Conference Board released its widely followed leading economic index for December. The index fell by a tenth of a point last month, significantly less than the half-point drop recorded in November, and also less than the 0.3 of a point decline economists had projected. In fact, 6 of the index's 10 component indicators improved in December. However, in a statement underscoring the economy's ongoing uncertainty, the board noted, "These improvements were more than offset by weak conditions in manufacturing, the high interest rate environment, and low consumer confidence." Finally this week, the Commerce Department reported on Thursday that GDP grew at an annualized rate of 3.3% in the final quarter of 2023. Although the figure is sharply lower than the 4.9% pace set in the third quarter, it's well above the 2% pace projected by economists. For the year, GDP grew at a rate of 2.5% in 2023, up from 1.9% in 2022, and slightly faster than the consensus estimate of 2.4%. That's all for now. Join us again next week. This is Devlyn Steele for Augusta Precious Metals, signing out.